Block stock, formerly known as Square, was down almost 20% this morning after a short report. Shares of Jack Dorsey's Block plunged 19% after short seller Hindenburg Research announced Thursday that the payment company was in its latest short position. Now I'm going to get to this in a second and explain my thoughts as well on the company and this short report. They're alleging that Block allowed criminal activity to operate with lax controls and highly inflates Cash App's transacting user base, a metric of performance. And I'm also going to talk about this. Hindenburg described Block's internal systems as a Wild West approach to compliance. Our 2-year investigation concluded that Block has systematically taken advantage of demographics it claims to help, and the research firm said that Block's Cash App thrived on serving unbanked customers. The report alleges those unbanked customers were involved in criminal or illicit activity. Hindenburg also alleged that Cash App's compliance programs were deficient. Now you can see the stock has bounced nicely. It's up about 9% from the lows this morning. And if you look at year to date, we're basically around par. So we opened up January 3rd at $64.64 and it's trading right around there right now. If you look at the 1 year, it's still down 52%. The 5 year, 24%. Max, it's up about 400% all time, and this came IPO around 2015 at $12.85. And you can see that Block price to sales is just over 2 as of right now. At its highs in late 2020, December 22nd, 2020, the price of sales was 15. Now here is the short report from Hindenburg Research, and I've read through all this. Now I've owned this stock for several years, and I'm still green on it, and I'm still holding. Their research claims that it involves dozens of interviews with former employees, partners, and industry experts, extensive review of regulatory and litigation records, as well as public records requests. It talks about most analysts are excited about the post-pandemic surge of the platform, with expectations that its 51 million monthly transacting active users and low customer acquisition costs will drive high margin growth and serve as a future platform to offer new products. Their research is saying that this is widely overstated. Former employees estimate that 40 to 75% of accounts were reviewed as fake, involved with fraud, or were additional accounts tied to a single individual. Now, this is really interesting, and I could spend a lot of time going through this, but I'm going to go through 2 main points, and I'm going to give you my thoughts at the end. So first, let's talk about Hindenburg Research. What are they all about? So it views itself as an investigative organization that shed lights on man-made disasters in the financial markets. They say that their objective is to save unsuspecting victims from financial disasters that are totally avoidable. However, research and criticism are not all that is done at the firm founded by Nathan Anderson in 2017. Hindenburg is confident enough to have skin in the game. What does that mean? Well, they short a stock and then they go ahead and do a short report and release that and they make profit. The American firm is an activist short seller. They bet against companies that they find overvalued. Short selling is a market strategy by which one can sell shares that one does not actually own. This can be highly profitable, especially if you see a company drop 10, 15, 20% in a couple hours. By predicting a fall to take place in a company's share, short sellers borrow the shares from the broker at the current market price. So if they did this last week, it was obviously a higher price. And when the price does fall, the sellers can then buy the corresponding shares at a lower rate, thus squaring off with profit. This counts as a sell high, buy low strategy. And this is what they intended to do with Adani Group, and they're doing it again today with Square or Block. Now, I'm not going to come on here and tell you with confidence that everything in this report is false. There could be some accuracy, but let's look at one of their main points and just try to break that down and see if there's any truth to it or not. So they say that Cash App is a web of lies. It starts with a user's ability to create an account with just an email address and a phone number. And although this might be true, the account is limited until you provide that social security number. So this says, until recently, Block failed to collect full user social security numbers for cash card users despite federal legal requirements to do so. Now they told us this today, March 23rd, 2023. And here's an article from December 10th, 2021. It says, why is Cash App asking for my social security number? The answer is simple, to stay on the right side of the law when handling finances. Like most financial services these days, Cash App requires you to enter your social security number to comply with Know Your Customer or KYC regulations. So what's actually going on here? This is right from Cash App. Secure your identity. Certain features within Cash App require your identity to be verified. So if you're going to use Cash App for illegal activities, you're going to need to enter a social security number. So if you look on your screen, this is the 10 most downloaded apps in 2022. Now, if they were requiring a social security number in 2021, would you think that Cash App here with 64 million downloads, the third most in 2022, that maybe there's a hole in this story? Now, here's the thing. You can open an account without a social security number, but that account is limited. So out of these 64 million accounts, there's certainly some accounts that don't have social security numbers. But can we prove that those were necessarily used for illegal activities? I don't know. But it's important as an investor to at least understand this stuff and try to find some holes in the story and look at the facts. I've owned this stock for a while. I continue to hold it. It's a little bit less than 1% of my portfolio. It's not a huge position, but I am bullish longer term. I recently did a video that covered the 12 stocks that I would buy if I were starting a new growth portfolio today. And Square was on that. And you can check that out with the link above. It's got 25 total stock picks, and I think you'll find the video very useful. Now, I could be wrong, and maybe everything that Hindenburg is telling us is true, and maybe the stock will continue to have pressure. That's a possibility. But when I think about using a financial platform for illegal activities, I don't think that Square is necessarily the only one. There are a lot of other competitive apps that can do the same thing. And the reality is that criminals are going to figure out a way, whether it's cash, cryptocurrency, whether it's one of these cash apps, PayPal, Venmo, you're going to figure out a way as a criminal to get the job done. That's just a fact. So I certainly don't want to invest in a company that is supporting this, and I truly don't believe at their core that they are trying to support this or they know about it, but certainly the app could be used for illegal activities. Again, illegal activities are going to happen regardless of the platform. So I look at the platform and say, is it helping people? Can this company grow? Can this business grow longer term? And for me, the answer is yes. Now, this is not financial advice. I'm not a financial advisor, and you have to do what's best with your money. When this stock gets down in the 50s, I think it's an opportunity to add shares, especially if you're thinking about 5 and 10 years out. If you look at the history of Hindenburg, they've done many short reports, I believe 20 short reports since 2020. And they have been accurate on some companies like Nikola, like Genius Brands, and a few others. But there have been names, for example, Twitter. Last year, the short seller made a successful deal out of the Elon Musk well-drawn-out takeover of Twitter. Once Hindenburg announced their short position on Twitter, the social media platform shares went from $49.80 to $37.39, and they profited on that. Now, this part is really important. And as a retail investor, you really have to understand what's going on behind the hood with some of these deals. Later on, the research firm even took a long position on Twitter, making profit on that trade as well. So they made profit on both sides, being short and long. So is Block stock a guaranteed home run long term? The answer is no. There's always going to be risk reward in the stock market. But I personally have over 100 hours of research into this company as well. And I've been long in the stock since 2017. I've listened to every earnings report since then. And for me personally, I'm going to look at my due diligence, compare it to what they've done, see if I can find holes in the story. Admit that there could be some risk there, but understand the business well enough to have conviction to ride through it. I think that Square longer term will be fine, but I could be wrong. In the end, do what's best for you and for your money. If this was helpful, make sure you subscribe, click the bell for notifications, drop a like and a comment. Have a great rest of your day. Take care.